Great morning, fellow traders. This is Austin. It's Wednesday, January 28th. It's FOMC day, and the pit session of trading has just opened. I'm working with the S&P in CM scalper mode. That would be using fairly fast charts, using an initial stop of 6 ticks, automated from fill. So, the stop is 6 ticks away from wherever filled, and away we go. This has been the overnight gyrations lately. You can see the illiquidity of the market pretty much exhibited here as it reacts to different news. The big event today is the FOMC. I don't foresee the multiple oscillations that everyone enjoyed yesterday. The market it swung all over the place following that roughly 30-point gap down open, especially yesterday afternoon. It traded all over the place, which was nice. I don't think we're going to see that today. Ahead of 2 o'clock, we might see some extreme activity from, say, 2:45 p.m., 3 p.m. Eastern into the close. And that's what I'm banking on for today. I'm going to be most active buyer before 11 a.m. and most active at or after about 2:45 to 3 p.m. Eastern. In the middle of the day is pretty much idle time. So here we go. 9:34. Okay, as they fire off the close, this one's gone 5 handles in favor. I am trailing to 4. So it's at +4. The first thing I do is after the market's gone a bit in favor, I advance the stop from -6 ticks actual fill to +1 tick. And so I make that position cover its cost. And then after that, I'm looking for 4 or 5 handles. And here we have 5 handles. And there we're out 5 handles, and that's that. So afterwards, it's sit, watch, and wait. But the majority of S&P trades in this mode are 3 points to 5 points in size. And I would say the vast majority of them are between 3 and 4 by far. It's very simple. I'm just keying off a filter chart. Right now it's 100% sell side, so all I can look for are shorts. If the filter chart flips bullish, then all I look for are longs. So that keeps me in any trend. Anytime there's a trend, I'm in it. All right. If the market's flip-flopping back and forth, I'm not getting many signals. So that also helps protect from chop. It serves 2 purposes, which is why I say, no matter which way the market moves, those of us who are trading the CM patterns approach, we're always with that move. We're never on the wrong side of a move because we can see which way the trend is when one exists. But in the times when there is no trend, when there's just chop, we're on the strength side of chop regardless. So we don't get shredded in that manner. Now from here, price may go 10 handles straight up in the air. Well, I don't have a buy signal. I'm not in a buy mode just yet. I have to wait for the filter chart to flip to that. So the only thing that I can't see are those immediate whipsaw turns out of nowhere, which quite frankly nobody can consistently trade. Anyone can catch some now and then. Nobody can consistently catch them all or even most. Alrighty then, it is 9:40. And price is whipping, as you can see. And this is the first 5-minute bar. So there's that. Looking sell side around 2031, 2030 plus, put it that way. 2030 plus is what I'd be looking for on the sell side if I get a confirm. And then from there, they're likely to go, he says. Let's pre-measure this, shall we? Wow. It's a wide range, 2022. Not really. 10 handles, that's nothing these days. Likely to trade to that zone or to this zone. 90% probability one or the other or both today. Might wait until the afternoon. They might just chop this general range here until the FOMC report. So you can see how this is congestion, basically. That is all just congestive from yesterday, and it may stay congestive all day today. We'll see. I would say roughly there. Okay, so regardless, I'm still looking on the sell side now until otherwise noted. That could change. If they take it up to about the 2040 zone, then it's going to flip to the bullish side, and I'd be looking for longs. So, other than that, sit, watch, and wait. 9:41. Okay, then 10 o'clock even in the second fill of the day at 32 half short. It's gyrating around here. If this one's taken out, and it is, okay, then the next action zone would be around 2031 sell, and the buy zone still doesn't happen until 2039 or so. It's got to get up and breach that before it's in sell mode. So here we are in an FOMC event morning. Like I said, I'm going to stick with it till about 11 o'clock, 11:30, and then shut it down, and then take another look from about 2:30, 2:45. So from say 11:30 to 2:30 is market avoid, and before that and afterwards, we'll see what comes along. For now, it's sell side only until noted otherwise. Got to crack that 239, 240 zone, and then I would be looking upside from there. Bottom fishing here is just in the chop zone, so that's definitely that ain't even part of what we do anyway. So looking to sell 2031 area, looking to buy if they get up to the 2040 area, and idle the middle. It is 10:01. Alrighty then, it is 10:17. Price came to the 2031 action zone. We're short, just like we discussed some time ago, and now we sit, watch, and wait, looking for execution. I'll move this risk here lower if and when price gets to about the 2029 zone. If it goes about two handles in favor in this situation, then I will take my stop to +1 tick and then go from there. If this gets stopped out, then I don't have any subsequent plans, and we're not really going directionally. We're in chop mode, and so then I'll just let the charts reset themselves, see what's next. So out of my hands now. Just doing my job objectively and letting the odds of probability play out as they do. 10:18. Okay, it is 10:30 Eastern. The crude oil inventory report just came out. That's what's shake, rattle, and rolling the tapes for the moment. Stocks included. So after this, the next known scheduled catalyst is the FOMC report to come. I went to trail that stop to +2 ticks and got taken out immediately. So the net result here this morning so far, for better or worse, is +5 handles, -1.5, +0.5, which makes a sum total of +4 index points. And I'm going to shut it down right there at 10:31 Eastern, this being an FOMC event, and I'm going to reconvene this afternoon past 2:30. So from now, 10:30 a.m. until 2:30 p.m. to come after the FOMC event, whatever goes on is going to happen in my absence. I'm completely ignoring the charts. But I will return to work for at least the final hour, and we'll see how that goes. So signing off until then, 10:31 Eastern. Enjoy your midday break. Okay, well, I'm back, not to be trading, but I'm going to dissect this final trade execution taken. I was on the sell side, of course, 2031, stop 32 into the 1030 news. That's right here. Okay. So I was short here. Let me get it exactly there. All right. And the 1030 inventory news came out, it went to 1028.50. So it went 2.5 handles in favor. What do I do with that? What do you do with that trade? What should we do with that trade? I don't know. It's already gone 10 ticks in favor, 2.5 handles into unknown volatile news. My management decision was to, after it had gone 10 ticks, my decision was to trail down to plus 2 ticks, which it came and took that out, and then it went 6 ticks higher from there, or 4 ticks above the original entry, and then it turned around and collapsed. And you can see now that it is algo surge slamming down towards the roadmaps. Well, hindsight's beautiful. Hindsight's a wonderful thing, and if we could apply hindsight in trading, we'd all be gazillionaires, because we would never make a trade management decision that was anything other than optimal. But we don't have hindsight. All we have is real time. And in real time, this exchange here looked to be playing defensive. And so I played it defensively, and that's how it turned out. And since then, price has gone more than 9 handles in favor of the original entry. And you can hindsight that to death. I have many times in my career, thousands of times. And perhaps you have too, and maybe you're still in that personal trap. We could play the what if game, and what should I have seen, and what should I have known, and what should my gut instinct have told me, and what should my feel have been, and da 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 da. And you know what the reality is? This is just a game of statistics. You just manage that trade the best way you can, and then you move on to the next one, and you manage that the best way you can, and you move on to the next one, and you manage that the best way you can. And you do all of that in rather similar fashion, and the rest is randomness. So, following the oil inventory report, which apparently for some reason had the S&P and the US dollar pinned, now they're on the move, and they've gone down and fulfilled the 233 coil markets roadmap, and there we go. So it's 10:47, and now I'm actually leaving the office until after 2 o'clock. I'll be back like 2:30 or so, and then we'll reconvene in the afternoon session. And there we are. See you in a few hours, that is. Okay, it is welcome back, by the way. It is 2:27 Eastern. I'm working as sell side here 2019 half, and I forgot to turn the recorder. I forgot I was even doing a video until I look up at the trade control center here, and I see the Camtasia recorder. Anyway, whatever. So we left off back this morning with the sequence that played out to here, and then after that it was somewhat volatile in the pit session, and price made some tradable oscillations, and then here's the usual knee-jerk post-news reaction. And as posted in the team room, the action point is the 2019 zone. We got a double break on that. I took the order at the second break, and it is working its way lower. Next would be the CM roadmap number 1 in the 2012-2013 area here. She's rolling. I'm going to lock in 2, and that would make 6 points for the day. Actually, I'm going to come over on this different dome to stay out of your way. So I'm just moving a dollar stop at this point, and if I can lock in 4 more, I'm going to do that for a total of 8. But if not, I'll let it whip me out for 6, and then I'll see what's next. For all we know, they're going to turn and burn and go higher like they did yesterday. There's no telling. We're just trading the waves here, whichever way they unfold. So, trying to stick in a stop at 15.50 or 15.25 if it'll let us. If it snaps back up, then so be it. It flexed down there to the 14.50 real quick and then hammered right back up. It probably, in this mode of trading, this mode of operation, I'm probably better off presetting some stop strategies. So in other words, if price goes four handles and a tick in favor, trail to whatever and blah blah. I'm probably going to automate my stops here in this process. I'm just working through some details for now. So anyways, it's right around that four handle mark that I want to trail to. So you know what I'm going to do? I'm going to go to three handles and a tick, and I will if they pop it right from here, then I'll live with 7 points and a tick. Compromise, because they don't, for some reason they don't want to crack that 15 zone right this minute, and it's early. All right, well, 7 points and a tick, and it's early. They may go diver down, or they may turn and burn up. We'll see. It is 2:31. Okay, was trailed out. Back in the there is the CM roadmap #1 hit. Go with 5 ticks on the trail. Basically, it popped me. I would have liked to have held the the 19 down to the 12 there. Would have been ideal for 7 handles, but it kind of popped me out of there. So I'm what I have 3 and a tick, and now 1 and a tick is 4.5. And there's 2 and a tick. Right at that mark they are. Well, anyways, so there is what's that, 9.5 handles? Damn, I should have trailed it down another half a point. I screwed that up. Could have had a 10 handle compilation here. Well, anyways, it is what it is. So it's still early, by the way. It's only 2:34. They could go anywhere. They could be trading in the below the 2000 level by the close, or they could be heading straight back up. Hard to say. So anyway, 2:34 Eastern. Okay, while there's a little bit of quiet time, this is that exchange. Here was the entry, and then the tag stop. Where is the fill? Oh, the fill is here. Just about to the tip, just about to the high tick there. They nailed me, and then here was the re-entry. All right, so that's just one of them things. I happened to pull the stop to a dollar value, and they hit it. I mean, what more can you say? Had a tick or two difference, and that I wouldn't have missed out on whatever the distance was here. But in any event, it's not that great. And so that's the point I'm trying to make. That's high-speed trading. That is CM quick strike mode in Scalper E fashion. Just like earlier when I said here, I managed the stop wherever I did. No, earlier today, yeah. Yeah, here. I managed to stop wherever I did. They took out the stop, and then they, went 10 handles further down and so on. Well, that's how it goes. Maybe the next time, well, quite frankly, yesterday didn't go that way. I just happened to get in some positions and the stops held, and that was that. And maybe tomorrow it'll be like that too, But overall, who wouldn't settle for half of that? Who wouldn't settle for 4 points a day, 2 points a day? Like I've said in the past, if you can just get good at averaging 2 points a day in the S&P, just 40 a calendar month, it'll take all the sides you can trade. That's the one pitfall of crude oil, which I love. You're not going to trade size there. It's without horrible slippage and partial fills and so on. Just brutal as far as that goes. But the S&P will let you trade size, so that's one advantage. It's more methodical is another advantage, and the margins are less. That's another advantage. As I've said many, many times in the past, there is no one ideal market or symbol for every single person to trade. Trading is a compromise of what it is that we choose for our own reasons. So just having fun with the S&P here. Still got an hour to go, 2:38 Eastern. Okay, here we go. This is the final position of the day, as called in the live room ahead of time. Got that posted in there. Got the charts all marked up. They are seeing what you're not. They're seeing the actual trigger charts and the action zones. Maybe this is going to continue higher. Maybe it's going to chop. Maybe it's going to turn and come right back down. We have no idea. But it's taking the trade and then managing the results accordingly. Worst case scenario is going to be 8 index points up unless they slip on the out. And the best case scenario is going to be something better than 10. So worst case, going to finish at 8 handles for the day. Best case, something greater than 10, because I'm not going to do a thing until I can move this stop to plus 3 ticks after price is away from there. If price goes away from there, that is. So see how it goes. 2:55 Eastern. Alrighty then. That winds up the day. 2:57 p.m. by the way. And I moved my stop from 6 ticks to 5. Took it out at 5 ticks, so the end result today is plus 8 handles and a tick, which I don't think is too bad. And it could have been better, like I said. We discussed that before. Could have, but then again, if I had executed this one, if this one had executed differently, let me put it that way, maybe I wouldn't have worked the afternoon if I would have had 10 handles or better here. So who can say? But it is what it is. Like I said, yesterday afternoon, I discussed in the blog, just working from 12:45 right into the close was good for 20 points and a tick. And now today, obviously choppier and FOMC related and whatever. The potential was there for another 20 points, but no one's ever going to make that happen every day, or not even quite often. I may not see another 20-point day for weeks or months or the rest of this year. I don't know. And I don't care if I can pick up 4, 5, 6, 8 here and there, 4, 5, 6, 8 here and there on a really bad day, lose 4 or 5, and average 3, 4, 5 index points per contract a day in a month. It'd be a hell of a month. Hope this helps. We'll do it again tomorrow. And as always, best trading wishes.